Hello good people, it's me Kumanawa, your money manager. In today's video, I want us to talk about personal current accounts. As we all know, a bank account is a very important piece of your money flow, your money management. We can all attest that as we start working, the moment you receive that offer letter and your first week at work, one of the most important things that your employer is going to ask for is your current account. And mostly at this time, you just started working and maybe you don't have a current account. Maybe the only account that you have is a student account, the account that you use to receive your allowance on a monthly basis. But your employer will be there asking for your current account, and it's one of the most important things that you need to furnish them with the first week of your employment. So in today's video, I just thought we could look at some of the factors that we have to consider when choosing where to open a bank account. And also I'm going to share with you 5 current accounts that I feel that are ideal for somebody who is just starting out, somebody who's just been employed. So let's look at the factors first. 2 very important factors that you need to look at. The first factor is income factor. We need to understand that bank accounts are structured differently, and most banks they do segregate their bank accounts according to income, and that income is going to dictate the kind of savings that you are also going to get from your employer. The higher your income, they are going to be prioritized in terms of services, and you're going to enjoy some benefits that somebody who's earning a low income will not enjoy. So income bank accounts are segregated according to income. You need to understand that. You need to be asking yourself, where is my income? And then once you know your income, then you would know, okay, these are the kind of accounts that are available for somebody with my level of income. That's the first factor that you need to look at. The second factor that you need to take into consideration is the fee structure. Guys, you need to appreciate that banks, commercial banks, are in business, and therefore they need to make money as much as they can, and they need to be profitable for them to continue operating. Therefore, account services are not for free. There are some associated fees that you're going to pay for your accounts. Therefore, you need to understand how these fees are structured, because they are also structured differently. There are 2 types of fee structures across different banks. The first fee structure is what we call pay as you use, or some will call it pay as you go. So with pay as you go, what happens is that your account is going to have what we call the monthly maintenance fees. Plus, for every transaction that you make out of your account, you are going to incur a fee. So you get the monthly maintenance fees plus per transaction fee. So each transaction that you're making is going to be charged on a standalone. That is what is called pay as you use or pay as you go. So the second type of fee structure is what they call bundled fees. With bundled fees, what they're going to do is they're going to take the monthly account fees and they're going to give you a certain number of transactions, add them together and charge you a once-off fee, like a lump sum, and charge you like a lump sum fee. So for all the transactions, they're going to be lumped in this amount that you are being charged with. So normally you just have like one single fee that comes out of your account, and that fee is for all the transactions that you made as well as for maintaining the account. That is bundled fee. I know at some point there was a lot of noise with a certain bank where a certain type of account was charging bundled fees, and a lot of people did not know that, okay, this is bundled fees. They will see like 150, 200 going out of the account that may, oh, this bank is chowing our money. They did not understand. People did not understand the fee structure. However, as you open an account, you have the option. You need to decide. Somebody should not decide for you. They need to ask you, which fee structure are you comfortable with? Do you want to use the pay as you use, or do you want the bundled fees? This is so that you can avoid surprises, because if you're going to go for bundled fees and then at the end of the month, maybe you left your last 200, you go and try to access it, you find that it's not there because of the fees and you were not aware because somebody decided to give you a bundled fee. So you need to understand these fee structures, very important. Now that we understand the factors that we need to look at, which is income and the fee structure, let me just share with you the 5 ideal accounts for somebody who is just starting out, somebody with like a small salary, small level of income, they've just been employed, or maybe they're running their own small business and they've decided that, you know what, I'm going to pay myself a little bit of a salary and I need a separate account because I need to separate my business income from my personal income. So these are the accounts. These accounts, I classify them as the top 5. I have looked at the monthly maintenance fees. So these are the accounts that they will charge you like the lowest monthly maintenance fees. However, I want to remind you that you don't need to look at the account monthly fee in isolation. You also need to educate yourself as much as possible on fees for the different transactions. You need to be understanding yourself. What type of transactions am I likely to do? Am I the kind of a person who is more comfortable with mobile money transfers, your e-wallet, your APSA, your cash send, whatever they call them? You need to understand the fees for those structures. And then, am I the kind of a person who's only going to use the app and I'm going to transact through the app? Therefore, you also need to understand the fees for those kind of transactions. You also need to understand the fees for cash withdrawal. Am I likely to withdraw the money from the ATM, or I'm just more likely to use the money from the card, swiping? Because most banks, what I've realized is that they sort of like offering post transactions for free, where you swipe, it's for free. They know where they're making the money. This is why they can do that for you for free. So you need to understand these things. So these accounts, 5 accounts. The first account is APSA Ignition account. As the name is saying it, this is a starting account. Account maintenance fee for this APSA Ignition account is 5 pula 59 tebe. I'm not sure whether it's VAT inclusive, but I think it's VAT inclusive. 5 pula 59 tebe. And the income requirement for this account is 50 pula. All you need is to earn 50 pula. Then you can open the account. See, very easy. The second account is Access Bank Fresh Current Account. Like I say, it's fresh current account. It's for somebody who's fresh, somebody who's just starting out. So this account, the account monthly maintenance fee is 5 pula 67 tebe. And the income requirement for opening this account is a minimum of 750. You need to be earning between 750 to 4,999 pula 99 tebe. So that's all. If you earn between this, you can go and open your fresh current account with Access Bank. The third account is Stanbic Transact account. The account maintenance fee for this account is 13 pula 64 tebe. And the income requirement to open this account is only 800 pula. And then the fourth one is FNB Smart account. FNB Smart account. The monthly maintenance fee for FNB Smart current account is 13 pula 70. The minimum income requirement is 2,499. 2,499 is all you need to earn for you to open this smart current account. See, it's for somebody who is starting out. So the fifth account is Standard Chartered Easy Banking current account. The monthly maintenance fee for this account is 13 pula 84 tebe, and there is no income requirement for this account. It means that anybody can open it whatever amount you earn. So there's literally no minimum amount for this particular account. So you can see these are the accounts for starter. Somebody who's just starting out, these are the accounts that you can look at. The thing about bank accounts is these are your starter accounts, current accounts. So as your income is growing, you will also be upgraded to the next account that you qualify for. Normally the bank can initiate that upgrade, or sometimes they sort of like, okay, maybe they get busy with other things and they forget to initiate that. But you have to be aware, because the higher your income, the more benefits that you get to enjoy. But also fees, you pay some fees. But I couldn't talk about all the current accounts that are available out there because there are many. So I have compiled all the personal current accounts available in Botswana, and there's a link in the description section that you can click to access that information. So when you click that link, it's gonna take you to my Facebook blog page, and you'll be able to have a full view of all the accounts that are available out there. This is all that I wanted to share with you today. I hope you find this video insightful and it will actually help you in making that decision. Or maybe you know somebody who's just been employed. You can share this video with them to help them make that very important decision. Remember, a bank account is a very important component of your money flow. This is where money is coming in and then money is going out, where you'll be spending it across all the different spending categories as per your unique spending needs. This is all that I had for you today. Don't forget to like and also leave a comment. Maybe you can share with us your banking experience, where your current account is, what the features are, if you're happy with where your current account is, and we can help each other really to have that better experience with our banking partners. Thank you very much for watching. I will see you in another video.